Good morning, everyone. I would like, obviously, to begin by acknowledging the traditional owners of the land on which we meet today, the Wurundjeri people of the Kulin Nation, and I pay my respects to elders past and present. Thank you, everyone, for joining us today, and thank you also to Simon and the Council for your warm welcome since I joined as chair last year. Today is an important day, bringing together government regulators, ABA members and associate members for an important conversation at a critical time. The theme of today's conference, Banking Boldly, Securing Australia's Future, speaks to the moment. It's a moment that demands leadership and a contribution from the banks that is practical and grounded in the national interest. In my address today, I will focus on the external environment, what that means for our economy and our banks, and how the ABA is responding. To begin with, allow me to make 3 observations on the broader environment in which Australia sits today. My first observation is that the global order which many of us grew up with, it's being rewritten. Throughout the Western world, domestic priorities and narratives are changing dramatically. Concern over living standards, the distribution of wealth, and social cohesion are profoundly reshaping global and national narratives. At the geopolitical level, power politics, instead of values, is resurgent. Both warfare and economic nationalism are challenging the rules-based order which define most of the post-World War era. Second, the technological and security landscape is evolving at an exponential rate. Artificial intelligence, the energy transition, digital infrastructure, and defense capabilities are all challenging the world we live in at pace and posing fundamental questions for our societies. The scale of these dynamics is immense. Spending on AI, defense, and energy transition is going to exceed this year $10 trillion globally. My third observation is perhaps more surprising. In the middle of this turbulence, the world remains economically resilient and eventually, indeed, dynamic. The global economy has continued to grow with another 3% plus year in 2026. If the significant investment in AI and related industries pays off, this number needs to be much higher. So what does this mean for Australia? Well, as I said recently, Australia has many advantages. This includes strong rule of law and institutional stability, high levels of education, vast resources and energy reserves, positive demographics, and proximity to Asia, the fastest growth region in the world. Even so, with all of this, since the global financial crisis, Australia's GDP per capita has grown less than 1% per year, compared with 2.5% in the previous decade. I believe we need to collectively reflect on this and reset our levels of ambition and pragmatism to harness our opportunities as a nation. We are at a pivotal moment and we have a choice to make. We can either harden our defense and try to weather the storm, or, as the Socceroos showed us, we can balance this with an effective and target counterattacking that allows us to compete with confidence and win. Australia needs to take a more entrepreneurial approach, to be less risk-averse if we want to succeed in this new world order. Amongst many things, this requires a banking system that is strong and responds to our customer needs. Our banks play two key roles. First, to be a driver of this bold ambition, supporting entrepreneurship and economic growth. And secondly, it's to help those in need during difficult times. This second role is particularly important at a time when many Australians face cost of living pressures as inflation continues to persist. This is underpinned by the work of the ABA, whose mission is to deliver a strong, stable and trusted banking financial system that helps grow the Australian economy and builds financial well-being for Australians. In this context, the ABA Council has set out 4 clear priorities for the industry, which I will outline today. First, on improving regulatory efficiency to deliver more capital to the economy. As we look ahead, it is important to be clear about the strength of the banking system. Australian banks are unquestionably strong, as measured against comparables globally and delivered through regulatory settings. That strength matters, as it allows banks to absorb shocks. However, it must be balanced with capital productivity, ensuring capital actively supports lending, investment and economic growth. There is more that can be done, and this starts with ensuring capital settings remains fit for purpose and supporting lending and into the economy. We want to continue to be unquestionably strong. At the same time, peers such as the UK or the US are reassessing elements of their capital frameworks with lending growth in mind. This global context raises a clear question to Australia: whether current settings are doing enough to support efficiency and growth while preserving the resilience and confidence in our banking system. In that context, we welcome APRA's upcoming consultation on recalibrating capital risk weights to better align requirements with risk while supporting lending and investment. This is an important step in a continuous dialogue with APRA on this issue, and we look forward to participating constructively to find that balance. A similar balanced approach should extend to the broader regulatory framework. It means improving the efficiency of the regulatory environment by reducing duplication and unnecessary burden while backing initiatives that uplift productivity. Consistent with this, we support the government's budget measures to modernize, simplify and improve regulation across the financial sector. Delivering sustained productivity gains will require continued reform, and this is why the industry supports the call for all levels of governance to cut regulatory costs by 25% by 2030. A strong banking system and a strong economy are not separate objectives. They are fundamentally connected and equally important. Our second priority is enhancing our sovereign payments capabilities. Our Australia payment system is a critical national capability. It operates much like other systems we rely on every day, which are often unseen but fundamental to living our lives. It keeps money moving securely and efficiently throughout the economy. Banks have invested heavily to build and maintain that system, including more than $2 billion in the new payments platforms, which enables near real-time payments for all Australians. Maintaining that capability requires ongoing investment. Recent regulatory decisions affecting funding within payments systems risks shifting value from the local institutions that build and sustained that infrastructure towards global providers. That is why it is essential that policy settings take a holistic view, one that places a sovereign capability and resilience of Australia's payment system at the center of decision-making. As the payment systems evolves, all participants, domestic and international, should operate under equivalent obligations, contributing fairly to costs and supporting the integrity of the system. Against this backdrop, we look forward to the RBA's upcoming review of the retail payment system, as well as the government's new strategic plan. Both of these will be important in shaping a framework that supports long-term investment, capability, and resilience in sovereign infrastructure. Our third priority is supporting an ecosystem response to combat scams and fraud. Australians need to trust that the banking system is safe and that safety is built on security. But advances on technology are increasing both the scale and sophistication of scams and fraud, and that is placing a pressure on that trust. The industry has taken decisive action. In 2025 alone, Australia banks invested $2.5 billion in protecting the banking system and customers from all types of financial and cyber crime. Through the voluntary and industry-led Scam Safe Accord, initiatives like confirmation of payee, already used more than 100 million times by customers, banks are strengthening safeguards, improving detection and sharing intelligence more effectively. Policy settings are also evolving, and we welcome the government's work on the Scams Prevention Framework. The framework's success will require a clear focus on prevention, making Australia less and not more attractive to scammers, and ensuring consistent obligations are shared across the ecosystem. A well-calibrated framework should close gaps and reinforce shared accountability with a strong focus on preventing harm at its source. Banks stand ready to meet these and other clearly defined obligations that help protect our customers. We are confident that the biggest gains in scam prevention can be had by stopping scams at the source, which is why the ecosystem approach is critical. Digital platforms should be accountable for blocking the advertising of known scams. Same way banks should be accountable for stopping payments to known scam accounts. The framework should avoid the mistakes of some markets overseas that focused on redistributing losses, or worse, creating incentives that encourage scammers to target Australians. Education is equally critical, so customers are equipped to protect themselves. We need a societal firewall where customers, banks, telecommunication providers, digital platforms, and other sectors each play a role in defending against scams without creating moral hazard. While banks have acted quickly, we must be agile to stay ahead of new threats beyond scams, which are becoming more complex. Cyber attacks are becoming more frequent, faster, and harder to detect, and are increasingly enabled by artificial intelligence. In turn, the industry is strengthening its defense and working collaboratively to keep the bank's system safe. This includes building a shared understanding of threats to the system, reinforcing core cybersecurity fundamentals, and developing best practice defense. This work will be supported by the ABA's newly established forum to support industry response to cyber threats. Our fourth and final priority is strengthening regional banking and cash access. Banks are responsible for ensuring Australians have access to the banking and cash services they need. The major banks have committed moratoriums on regional branch closures alongside strengthened bank-at-post arrangements. These are important developments, but they are not, on their own, a long-term solution. The focus now must shift to more durable settings. Even with continued changes in the way people bank, our industry knows that we have an obligation to provide Australians in rural communities with access and choice in banking services. We are actively progressing practical, industry-led solutions to secure access to both in-person banking services and cash. The ABA has welcomed the government's proposed regulatory framework for the cash-in-transit sector, which will provide an important safeguard to ensure the ongoing distribution and availability of cash across the economy. Banks and retailers have already played a critical role, providing more than $100 million in additional funding to stabilize cash-in-transit services and keep cash moving throughout the economy. The priority now is to build on that immediate support with a durable, long-term framework supported by appropriate transitional arrangements to ensure the system remain resilient and reliable into the future. Now, to wrap up, let me leave you with this final comment. Australia's banks are backing Australia. We know that at times of uncertainty and fast-moving change, Australians turn into national institutions, including our banks, for strength, stability, and support. Now is the time. There is a clear thread running through our ABA priorities, protecting the national interest and protecting Australians. Our role is to ensure Australia meets that future with a banking system that is trusted, capable, and secure, one that serves households, business, and communities with reliability and integrity. One that gets the balance right between supporting growth and protecting Australians. My commitment on behalf of the ABA is that as an industry, this is where we will focus. That is what it means to bank boldly. And that is what we help to secure for Australia. Thank you very much.